Orange owns 95% of Orange Uganda and 70% of Telecom Kenya, and both have been making losses. Industry experts say the mobile sector in East Africa is growing rapidly, but that only certain companies are benefiting. Others are struggling.
One could be that there were certain returns expectations within a given timeline. They invested the capital, they did the initial market survey, they come and check and they discover that those returns are not coming through. And then they see it in another African country, then in another African country.
Orange's withdrawal would leave the Ugandan market to MTN and Indian giant Bharti Airtel. Analysts fear that could mean higher prices.
Airtel, with the acquisition of Warid, almost came neck to neck with MTN. Now, these two are now having a certain strategic way of positioning themselves to ensure that they remain right there on top. Any other person below there, you've got to have some amazing drastic step to take, short of which you can be closed out by these two. They call that one oligopoly, where very few strong players position themselves brutally and can result in attrition.
Many consumers fear less competition could also spell a poorer service.
Of recent, we've been receiving messages that internet won't be around for 1 week or more. We've been receiving messages that from 8 to 10 you will not be able to receive calls. That network dropout is always causing us problems as callers, and we find like we're not enjoying the telecom company that merged.
When I'm to make a call right now, they are going to tell me that the number is not in the network. Yet I call that number every day. So that clearly proves to you that we are going to suffer the more as these companies unite.
For telecom firms to remain in business, analysts said they must be aggressive in adapting to new technologies and in their marketing strategies. Uganda's telecom sector is a tough place to operate. Isabel Nakirya, CCTV, Kampala.